This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview.
Joining us today is Kieran Mosseri, the CEO of Cadence Minerals. Nice to be talking to you again, Kieran, on site from the Amapa iron ore project. How are you?
Yeah, good. It's great to be once again out on site at the Amapa project, and it's great to speak to you from here and speak to our shareholders from here as well.
Indeed. Well, it's nice to see it there in the background. It's looking like you've got good internet, which is fantastic, potentially boding well for a visit that I may or may not do in the near future when some things are going on. But what's the purpose of your visit? And also, let's just think about the end of the year. You know, what are the key things that you've achieved at the Amapa iron ore project this year?
Yeah, so the purpose of the visit is a year-end review. So we go through management, what they've achieved, how they hit their targets, looking forward to next year. And also in particular, they're finishing off some of the first stage of the environmental studies here at the mine. So I was visiting that, looking at how they're doing, what they're doing, reviewing the work done. And also we're looking at upgrading the safety of our tailing storage facilities, which is about 2 or 3 kilometers in that direction. And that's, again, seeing how they're progressing, when we're going to see to get to that completed. I suppose one of the question that you also asked is, what have been our achievements at Amapa? I think if I was sort of the 3 bullet points, was putting together and publishing a new measured resource, upgraded measured resource of 300 million tons at 38% at the beginning of the year. You know, alongside that, a pre-feasibility, robust feasibility at $949 million. And then later on the year, it was getting the licensing in place, obviously getting the MOU in place, the financing MOU, plus other things. But if I were to those 3 things are probably the big highlights for the year for us at this project.
Well, of course, the PFS at the beginning of the year, that was an important milestone, of course. And typically you'd go then almost straight into a DFS, a definitive feasibility study, which then, of course, enables that project financing. Why didn't you do this?
It was pretty simple. There were 3 reasons again. The first reason was the inflationary environment. We'd been seeing some other DFSs coming out, and the volatility of pricing we felt would have just represented a DFS that would have probably inflated costs well above what would realistically have been. 2, at the time, there was a change in government or state governor here, and before that, there was the license approval was very slow, so we didn't know what was going to be required for our licensing. So there's no point in carrying out a DFS and not knowing the timeline to getting the licensing. That got resolved in the middle of the year, and we got a timeline, an accelerated timeline. So that that prevented us doing the DFS this year. We now this year, so we now know a timeline, and the intent is, subject to financing, is to get and start that DFS next year. The third is simply the capital markets at the time, at the beginning in this year, were horrible, and we really felt that maybe waiting a bit later would allow us to, and an improvement in the share price would allow us to at least start the funding, and also getting the MOU in place, which we got, shows a very clear path to a debt funding in the future.
Okay. Well, of course, back in September, we discussed the resolution of one of the items, the shortening of the timeline for the licensing required for the rehabilitation and reconstruction of the mine, railway, and of course the port operations to 12 to 16 months. How are you looking on the schedule of these elements?
Looking fine. I think what we're going to be delivering is the first set of the studies. So basically, while we're sitting here, the mine and the railway, which goes about 197 kilometers that way. That should be delivered in March, so we'll deliver it. They take up to 6 months to grant the licenses for those. But the port, because we're slightly modifying the port, we'll probably have that done in June, July, so another 6 months for completion. So as we said before, at this point in time, we're going to be delivering in terms of our deliverables to SEMA, which is the Environmental Authority, and assuming that they live by their 6-month timeline, we should expect to get our installation licenses, which allows us to construct the asset and then bring it into operation, the same timeline, which is at the end of next year.
Okay, excellent. And of course, the licensing was one of your stated goals for the year. The other was entering into the JV or other agreement to help finance the project construction, which you in part achieved with the financing and the EPC MOU signed with the TCIDR in October. This delivered a substantial jump in the company's share price, clearly investors anticipating the move up the value curve to the DFS and construction. Did Edison Research, I understand, have valued Amapa alone at the pre-DFS phase at 23 pence per share compared to the current market? And in Cadence valuation, which would suggest a huge discount to the book value, what do you think needs to happen for that value gap to close?
I think there's two things that need to happen. There needs to be, which we've seen with all equities, especially junior equities in the UK this year, we've seen an extraction of cash from that market. So that needs to change. And we're certainly starting to see the green shoots of this in our conversations with middle fund managers that see next year as something quite positive, with a drop of inflation, a bit more spare money, and a risk-on approach as sort of those bonds don't become attractive. Risk-on approach in terms of equities becomes more attractive. So that needs to happen. I think that's probably the biggest driver. And then, of course, us, progressing down the DFS with the idea of, having that DFS ready by the end of next year, again, subject to the full financing.
So obviously that's going to be a big goal for next year as a DFS. What else would you like to achieve throughout the course of the year?
So DFS being one, I think one of the things that we mentioned was trying to approve, it's something that we didn't achieve this year, partly because we're capital constrained, was to achieve an improvement in the operating costs at this plant, right? If we can change that design and save a couple of dollars a ton, that's $12 million to our bottom line, or 5% extra EBITDA if we can save a couple of bucks. So that's going to drive. We'll do it at that PFS level. We're probably going to contract someone fairly soon and that'll get started. We've just been over to our neighbours, Tucano, who have historically 123 million tons of further iron ore deposits, which could increase the resource by another 5 to 10 years, depending on what's left. Okay. So we're discussing with them, getting the data, getting the information. That's another thing. So I think those two things will be the first things that get done. And then after that, then we'll have the DFS. And hopefully those two will reduce our DFS operating costs or mitigate the inflationary environment that we've seen for the last year.
Okay. So can we expect to see more activities on site at the Amapa Iron Ore project next year in terms of actual people working, things going on?
There's still plenty going on. It's just that, next year there'll be more people in terms of consultants, advisors coming in to do a lot of the engineering work. A DFS is a far more, it's still called basic engineering, but it's a far more detailed project. And hence takes more time. But so we'll see more people like that. The other thing that we would love to achieve, which also frees up the financing, and which we're really, I suppose, we're hopefully getting there, is to pay out the syndicated banks with one fell swoop through a prepayment. And that means that then the asset has no securities over it, and so therefore debt funding associated with the DFS at the end of next year becomes a much easier, or it becomes a proposition, because typically the debt has to securitize over the asset. So that's another thing. And that means, of course, we'll ship our iron ore stockpiles. Unfortunately, this year it hasn't occurred. But, iron ore prices have improved substantially. So that's a target for next year as well. Okay.
Getting into some shipping. Excellent. That's good to hear. Let's think about some of the other projects. So you've got Sonora as well. What's the latest? What are the sort of standout achievements from this year? I know you recently hired Clifford Chance, didn't you, to help engage with the Mexican government there. So what are some of the key things going on with Sonora?
It's pretty simple. I think the government has reached a point. So the Mexican government has reached a point where they've effectively claimed to cancel the licenses and therefore reclaim the lithium megalith lithium licenses. And to be clear, we are pursuing both megalith and megalith, which are the two licenses we have 30%. And we've submitted our proposal to negotiate. And there's a cooling off period. And then after that cooling off period, you enter into arbitration. So that is the point where the Mexican government have effectively, you determine, have they expropriated your licenses, and therefore under UK-Mexico bilateral investment treaty, doing so, there would be a form of compensation, and we'd be seeking essentially fair market value compensation for our assets, and have communicated that to the Mexican government.
Okay. And on the other projects, and how have you felt the other projects, i.e. European Metals and Hastings Technology Metals, have performed throughout the course of the year?
Well, I think in terms of their share price performance, Hastings has been disappointing, and certainly we were looking to utilize a large chunk of that capital to fund, to fund this, and unfortunately, the basket of neodymium and praseodymium, which is the elements they're looking to extract, has dropped substantially, and their share price has matched the same. But fundamentally, it's a project that's financed. It's going to be in construction, or is in construction. It's got a timeline to production, so that's positive. But its underlying sort of basket of material it's going to produce has reduced in value. I don't know why, fundamentally, because those permanent magnets are what we need for the electric vehicle transition. So I see positives in that. But at the end of the day, we want to utilize that money as well to reinvest in projects like this, rather than to develop these projects further. European Metals, they've been doing their definitive feasibility study. They've pretty well followed the market of lithium, and let's see how that goes. Okay.
Well, thank you very much for your time. It's been a fairly good year, I think, then for Cadence, but next year is looking like a much more important one, getting that DFS done. But thank you very much for your time today. Kieran Mosseri, the CEO of Cadence Minerals.
Thank you very much, Mark. Hope to speak to you soon.
Thanks.
If you enjoyed this interview, then give us a thumbs up, a like, or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.